Again, this is a short-term pain. We're clearing out the dead wood. We had a great run from 20,000 to 110 on Bitcoin, essentially, FTX lows until, Trump coin. And now we're having a 30% correction. It's pretty normal for a bull market. So I think, yes, people might have had a little bit too much leverage. Maybe they bought too many shit coins. But I think we're going to clear out all that dead wood, and I still believe that we could be 250,000 Bitcoin by the end of the year.
Arthur Hayes remains firm in his belief that Bitcoin is still in a bull cycle. However, he acknowledges that the gains have been heavily concentrated in Bitcoin rather than in altcoins. This divergence, he suggests, is due to a lull in liquidity and fiat money generation in the United States. According to Hayes, the political and economic landscape is deliberately being shaped to create an appearance of a recession, which he believes is a strategic move. Hayes argues that this economic slowdown is part of a broader plan by political and financial elites to force the Federal Reserve to lower interest rates and increase the money supply.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I absolutely still believe we're in a bull cycle. Obviously, the bull cycle has been a lot more concentrated in Bitcoin versus a lot of the other altcoin sphere. And at the end of the day, right now, we are experiencing a lull in liquidity, fiat money generation. In the United States, obviously, I believe that Trump investors are consciously trying to cause a recession, or at least the appearance of a recession, so that the Federal Reserve becomes on their side and lowers the price of money and increases the quantity of money. And also, if you think about it, right, regardless of whether you think, the political side of things, if there's a lot of fraudulent payments within the system and you want to get rid of those before you move higher, you can clean out the dead weight. And obviously that's going to have an economic impact. They're okay with it because they're doing it in the beginning of their administration versus, in 2026 before the elections. Oh no, let's go reform the entire government. The voting population is going to be very skeptical of that and say, oh, that's Trump's fault, that's Besant's fault, that's Elon's fault, versus there's probably a way that they can spin this as this is Biden's fault, this is the Democrats' fault. Again, whether or not you believe that doesn't really matter, but the markets, they're cleaning out the dead wood, and then they're going to reflate and they're going to print more money than probably anyone's ever printed before. You move over to the EU, right? I don't know if the Greens are going to come on side with the ruling parties in Germany to do this, constitutional fuckery to allow them to print as much money as possible to build weapons and rebuild their army. But if they don't do it this way, they'll do it another way. The sentiment is there. Europe wants to rearm, ostensibly to fight Russia, but they just want to spend more money at the end of the day. And so if it doesn't happen now, it'll happen later. They want to reflate. It might not happen in the next week to save your leverage long position in whatever you own, but that's coming at least within the next 2 to 3 years. China is just waiting. They're going to have some sort of agreement with the US and the rest of the world on how they want to reshape the global economy. Could be good, it could be bad. I don't know what it is. But once that agreement, or, fuck you, we're just going to go our separate ways, whatever that is, they're going to reflate as well. So they're waiting in the sidelines. And then you have Japan, where the BOJ is trying to raise rates. We'll see if they get there or not. But at the end of the day, they're not trying to add more liquidity into the system. So you have the four major blocks, either trying a bit of austerity to clean up the dead wood, or in the process of reflating their economies. And we're in this period where we expected all this, policy goodness, and Trump's going to do this and do that. And you might end up doing these things, but at the end of the day, it was liquidity negative. And so now we're seeing the markets finally react to that. I think in the, third, fourth quarter of this year, through 2028, we're going to have a massive money printing situation, right? America first, my nation first is inflationary. I need to rebuild every single part of my supply chain within my country to give jobs to people because they're losing them to robotics and AI, and to have resiliency in my defense space. That's massively inflationary, there's not enough private capital to fund it, they're going to print the money. And then you have essentially declining population and this sort of robotics AI thing. How that plays out, I don't know, but politicians need votes. And so they're going to print money to make sure that people feel okay. Well, the economic system, maybe whatever humanity is in and of itself, changes as well. Again, massively amounts of money printed. And then you have to service all the debt that they took off from COVID into the present. The US pretty much doubled the debt in existence, and every other country printed money as well. So again, this is a short-term pain. We're clearing out the dead wood. We had a great run from 20,000 to 110 on Bitcoin, essentially, FTX lows until, Trump coin. And now we're having a 30% correction. It's pretty normal for a bull market. So I think, yes, people might have had a little bit too much leverage. Maybe they bought too many shit coins. But I think we're going to clear out all that dead wood. And I still believe that we could be 250,000 Bitcoin by the end of the year. Does that mean that the particular shitcoin you own is going to be 100x higher? Probably not, because people are getting a little bit more discerning in the type of things that they own. But at least from Bitcoin perspective and the global, overall market capitalization of crypto, I think we're going to be much higher by the end of the year than we are today.
One of Hayes' key pieces of advice is to wait for confirmation from policymakers before making big investment moves. He warns against trying to time the absolute bottom, as major liquidity events tend to unfold over weeks and months rather than in an instant. He points to historical examples, such as the banking crises that led to emergency intervention and subsequent Bitcoin rallies, as a guide for investors to follow. Additionally, he emphasizes position sizing as a crucial strategy. Investors should ensure that they are comfortable with their allocations, being neither over-leveraged nor too conservative. The goal, he explains, is to feel a slight regret for not buying more when prices rise and relief for not having overcommitted when prices fall. This balanced approach allows investors to stay in the game without being forced out due to volatility.
So I think first what's going to happen is, let's say we go to 70,000 or whatever it is. We need to see S&P at below 4,000, 30% correction in the NASDAQ, something like that. Because at the end of the day, the U.S. government needs the stock market to go up to make their finances. That's what the game is about. And so we're not going to see anyone fail or any financial stress until that shakes out. And there's going to probably be some bond market things and some currency things. Something's going to happen. I don't know where it's going to happen. Could you have predicted that Silicon Valley Bank and Signature Bank and, they were going to go bust within 2 weeks of each other? Probably not. Wasn't what you were thinking was going to be the cause of, the bank term funding program and, $4 trillion of spending that pumped Bitcoin up 5x from that point. I don't know what the thing is going to be, but I tell you what, S&P down 30%, the 10-year could go to 2% or it could go to 5%. One of those moves, somebody's going fucking bankrupt. And the Fed's going to come in, systemic collapse, Sunday night, oh my God. And it might not, maybe it won't be straight up QE. Maybe it's we're going to end QT, or we're going to give the supplemental leverage ratio, or, there's some arcane thing of the Federal Reserve Act that allows them to print some money and give it to somebody. And then, then it's go time. And then I know, okay, there's a religion. Then I know China's going to come next. Okay, PBOC, let's go. Then Europe's going to go, okay, we're going to print some bonds so that we can go fight Russia and lose. Okay, boom, there you go. And then it's time to go. And then, I think Bitcoin is going to bottom before equities. And then if equities are really stressing or the bond market's stressing, Bitcoin is going to start outperforming, because it's going to say, okay, now we know the response. When there's financial distress, they always print money. It doesn't matter what the political leanings, left, right, center, print money. This is the system that we're in. We need the stress. We know what the response is. Survive the stress, profit from the response. And so that's our goal as crypto investors. It's not looking to go, we're going to go to 70,000. All of a sudden there's a Sunday night emergency Fed meeting and they're back at 110 on Monday. No, you're going to know. When the bank term funding program happened on a Sunday night and Treasury and Secretary Yellen came out and said, okay, we're creating this new program. Right. Bitcoin rallied at 2 or 3%, but it went up 5x over the next, year and a bit. Okay. So you have time. There's no reason to try to catch a knife. Okay, I didn't get the super liquidation wick on my particular asset, crypto asset of choice. Don't try to hit that. Wait for them to tell you when it's time to buy. And they'll tell you exactly when it's time to buy. You might miss out on the first 10% or 15%, but you'll get the next 5x without losing 50% of your stack trying to figure out when they're going to start printing the money. They're going to tell you when to print the money. And then you know what to do. I'll print a $5 million market cap coin, but I'll size my position accordingly, right? So, okay, I think it could go up 1,000x, but if it goes down 75%, I don't really care, that sort of thing. Versus like a much more liquid, larger market cap coin, I'll take a bigger position because they don't expect to make as much money in percentage terms, but in actual, dollars, I'll make more money because I've just taken a much bigger position, but I don't expect it to go down 75% in a day, that sort of thing. So it's always sizing accordingly. I like to think about it this way. Whenever the market goes up, I want to wish I bought more. And whenever the market goes down, I want to be thankful that I didn't buy more. So then I know I'm in the perfect sweet spot of size. And from my perspective, our clients we need to have good relationship with other VC funds. We need to have good relationships with new and upcoming projects. It's a very, very small set of people. And I want to understand what other investors think. I mean, I'm not the one going to all the panels and all that kind of stuff. So that's the youngins who are going around and meeting people and saying, okay, here's what I feel about the markets. Here's the sentiment, here's the vibe. That's what that's what they're going there for. I think a lot of people, and I love the party, but I'm already rich, so fuck it. It doesn't matter. We'll throw a party, I'll have a good time. But if you're like
I was gonna ask about that.
If you're building a project, like when I was back in the BitMEX days, like unless the conferences in Hong Kong are pretty close, I didn't really go to that many conferences. I figured out really quickly it's a fucking completely waste of your time and your money because you have other things to do. Create user value, create product market fit is not found at a fucking conference. And I don't know, me and my founders, we did the Web Summit. We paid $10,000. I don't know how much it was. Complete waste of money for some booth to sit there and like talk about Bitcoin in 2014 when nobody wanted to hear that shit. Waste of our time, waste of our money. We should have just, got a hotel room and did some more work. Go party at the conference when you're crushing it and you got billions of dollars of revenue or millions of MAU. Like fucking party like a rock star. But like, oh no, I need to go to the conference and meet people. For what? Your fucking thing isn't launched. Why are you at the conference? So I think most people need to understand what they're going there for. Don't use me as an example because, we're a fucking venture capital fund with one client, me, and I want to go have a party, so I'm going to have a party.
Arthur Hayes paints a compelling picture of where Bitcoin and the broader financial markets are headed. His analysis suggests that while short-term pain is likely, the long-term trajectory remains highly bullish. With an inevitable wave of money printing on the horizon, Bitcoin stands as a prime beneficiary of the coming liquidity surge. However, he cautions investors to be patient, strategic, and well-positioned to take advantage of the next major rally. If you enjoyed this breakdown and want to stay ahead of the market with expert insights, be sure to like, subscribe, and hit the notification bell. Please like and subscribe.